Good evening, everyone.
Good evening.
Good evening.
Good evening.
Good evening.
Good evening, sir.
Good evening, sir.
Good evening. Good evening. Yes. How are you all?
Good, sir.
Good, sir.
Great. How was the paper today?
Reasonably good.
Good.
Oh,
Reasonably good, sir.
important is to write all the papers. Yes. And the learnings that you take from each paper. That is what is more important. Yes. All right. Quickly come back, all of you. Yes, Shravan, where are you? Yanushree. Hi, Kushal. Chinmay, are you there? Yes. Bega, bega. All of you quickly. Quick, switch on your cameras and let's start. Quick, 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 everyone. Come back. Manyashree, are you there? Puneet. Tiring day, huh? Yes, Kiran? No? Full energized, huh?
Yes.
Excellent. Great. Super. Yes. Accounting. Yes. What is accounts? What is the definition of accounting? The art of recording, classifying, and summarizing in a significant manner and in terms of money, transactions, and events which are in part at least of financial in character and interpreting the results thereof. Yes or no? In this definition itself, you've got the accounting process, right? R, C, and S: recording, classifying, and summarizing. Yes or no? Any process has an input and an output. Yes. In accounting process, what is the input? It is my documents. It is a third party confirmations, bank statement, vouchers, invoices. All of this is input. Yes or no? Based on this, you record the transactions in where? Where do we record the transactions? Yes. Where do
Journal.
Journal.
journal,
Journal.
right? Then you classify it where?
Ledger.
Ledger.
And
Ledger.
finally,
Yes.
you summarize it by preparing the trial balance and ultimately my balance sheet and profit and loss account, which is my financial statements. Yes or no? Everybody?
Yes.
Yes. And through this accounting process only, you learned lot of other things, yes or no, which was covered in your introduction chapter also by Shetty sir, and partly here. I didn't touch upon much here because it was very in detail discussed in your introduction chapter. Yes or no? Yes, the golden rules of accounting, the modern way. Yes, what is the modern system? Tell me, any asset you debit or credit? Assets,
Debit.
Debit.
debit. Liabilities,
Credit.
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 incomes,
Credit.
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 expenses.
Debit.
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 Debit. That's all. If you know this, and if you can classify the ledgers either as asset, liability, income, or expense, you know which account to debit and which account to credit. Is it clear, all of you? Yes. Then golden rules. Tell me quickly. What are the golden rules of accounting?
Debit to
Debit
receiver.
the
Debit
receiver.
credit the
Credit the
giver.
giver.
Debit
Yes.
all. Debit what comes in. Credit what
Debit
goes
what
out.
goes
Goes
out
out
Debit
nominally.
and
all
Debit
expenses
all
and
Debit all
expenses.
expenses and
credit
losses.
all
All
incomes
incomes
and
and gains.
income and gains.
debit all expense and losses, credit all incomes and gains. Yes or no? Correct. But anyway, now even by using the modern system itself, you can pass all the accounting entries. Clear, all of you? Yes. So in this, we had learned very simple problems of preparing the trial balance and then P&L financials. All of this we learned in accounting process. Yes. Next, one more different type of topic which we had learned, different and the same thing but in the form of an equation. Accounting equation, all of you remember accounting equation? Yes or no? Accounting equation starts with very simple thing: liabilities equal to assets, liabilities is equals to assets. Clear, all of you? Yes. In liabilities, again you have internal and external, internal liabilities and external liabilities. Clear, all of you? Internal is nothing but your equity, nothing but equity. External is all other liabilities which is not your equity. Clear? Yes. And then you have your assets. When so assets minus external liabilities is nothing but your equity or internal liability. Clear, all of you? The same thing is then split. The same equation is split. Then assets you make it as fixed assets and then current assets. External also you make it as debt and also as current liabilities. Current assets minus current liabilities becomes working capital. ನೆನಪಾಗ್ತಿದೆ ನಿಮಗೆ? Yes or no? Correct. So fixed assets plus working capital minus your external liabilities becomes your equity. Is it clear, all of you? Yes. So this was your accounting equation. Based on this, we solved some very simple problems. Problem, when accounting equation problem comes, what we learned is the missing figure problem comes. Yes or no? Missing figure. In that, say if 4 figures are missing, you need to choose. You need to start with that figure where information is directly given in the question. For example, they might have given what is the sales and what percentage of the sales is sold on credit and how much of that is outstanding. Did you understand? Yes. How much of that is outstanding? There directly you get your trade receivables. Is it clear, all of you? Yes, you get your trade receivables. Likewise, okay, that would be the starting point. Next, maybe they've given information with respect to total assets. You equate the total assets with total liabilities. Total liabilities minus all other liabilities will give you capital. Arth ಆಗ್ತಾ ಇದೆಯಾ? Capital ಅಲ್ಲಿ maybe they've given opening capital but not closing capital. Yes or no? They would have given maybe opening capital, not closing capital plus, but along with it, they would have given you transactions, say drawings and profit or loss for the period so that you can arrive at the closing capital. Is it making sense, all of you? Yes.
Yes, sir.
So
Yes.
accounting equations start with that figure wherein most of the information is available already in the question and then go to dependent. Yes, those variables which are dependent on other variables. Is it clear? Yes, Amit? All of you understood? This is my accounting equation related problem. So accounting process, very simple chapter. Yes, the introduction part. Next comes subsidiary books. Subsidiary books. Yes, tell me, what are subsidiary books? They are nothing but your book of original entry itself. It is nothing but a part of journal. It is also a journal. Book of original entry. But when there are voluminous transactions, yes, when there are voluminous transactions and lot of frequent transactions, voluminous and frequent transactions are there. That is when we use subsidiary books. Is it clear, all of you? Such that one category of transactions is recorded in a particular book so that you can easily trace the transactions, right? You have sales all registered, recorded in sales book. Your purchase recorded in purchase books. Is it clear, all of you? Yes. Now, what are the different kind of subsidiary books that we learned? First one is your purchase book. What is recorded in purchase book? Credit purchase of
Goods only.
goods only. Credit purchase of goods only. Clear? That is in purchases. Next, sit straight, all of you. Sales book. What do you record in sales book? Credit sales of
It's of goods.
goods only. Is it clear? Yes.
Yes,
Credit
sir.
purchase of goods, credit sales of goods only is recorded in purchases, recorded in purchase book, sales recorded in sales book. Is it clear? Next comes purchase return book. Purchase return book. All those purchases which was earlier recorded in purchase book. That means it should be a credit purchase of goods. It should be a credit purchase of goods. When such goods are returned, it is recorded in purchase returns book. Is it clear, all of you?
Yes, sir.
Yes, purchase returns book. Same way, sales returns book, Apurva. Sales return book. What is recorded in sales returns book? Return of those goods which were sold on credit. Right? Earlier, now it is recorded in sales returns book. Yes. What is the document which is issued in case of a purchase return? What is the document issued? Is it credit note or debit note? Always confusion. Always confusion. I told you, always remember from the party's perspective. So that particular party, you will debit or credit. Purchase return and the creditors, now you will debit or credit.
Credit. Credit.
Purchase returns only the creditor, now you will debit or credit.
Debit.
You will
Debit.
debit. Therefore, it is debit note. In case of sales returns, you will debit the debtor or credit the debtor.
Credit.
Credit.
Credit note. Clear, all of you? Yes, yes. So these are the 4 main books. Then you have got your bills receivable and bills payable and cash book where all cash transactions are recorded. Now, irrespective of whether it is goods or not, irrespective of whether it is goods or not, any transaction, if it involves cash, you record in cash book. If it involves cash, when I say cash, I mean bank also. Yes, if it involves cash, you record in cash book. Is it clear?
Yes, sir.
Yes. Finally, if it's not recorded in any of the earlier books, you'll record it in journal proper. You'll record in journal proper. All your adjusting entries, closing entries, opening entries, all of such entries are recorded in journal proper. Right? Any transaction, say purchase of fixed asset, will you record it in purchase book? Purchase of fixed asset? Will you
Journal.
record in purchase
Credit.
book? No. First of all, is it fixed? It is fixed asset. Whether it is credit or cash doesn't matter. My question was purchase of fixed asset. Will you record in purchase book? Yes or no?
No.
Simple no, because it is not goods. It is not goods. Next question you'll ask, sir, is it on cash or on credit? Next question is it on cash or credit? If I tell you cash, then where it be recorded?
Cash book.
Book.
Cash book. If it is on credit, finally you'll come to
Journal.
journal proper.
Journal proper.
Clear? Yes, this is with respect to subsidiary books. You have very simple formats, right? Our simple formats go through Madi, solve Madi, that's all. Other one problem for each. Purchase book, one problem you can do, sales book, one, just so that you're familiarized with the format. 5-10 minutes bisaki ಮುಗಿಸ್ಬಿಡಿ ಅಷ್ಟೇ. ಅರ್ಥ ಆಯ್ತಾ? Don't read it. Just 5-10 minutes you solve one problem and close it off. Is it clear, all of you? Because if it comes, it's a jackpot. You will get full marks. ಅರ್ಥ ಆಯ್ತಾ? If this question comes, it is jackpot, you'll get full marks. Yes. So that is subsidiary books. And finally, in cash book. Cash book we learned there are different types of cash book. First one is your simple cash book. Yes. Otherly, you've got receipts and payments. That's all. Only receipts and payments. In this, what point you should remember always is, can a cash book have credit balance? Can a cash book have credit balance? Tell me yes or no.
No, sir. No,
No,
sir.
No,
it
sir.
cannot. Because credit balance means you have spent more than you have received. Can you pay more than you receive?
No,
No,
sir.
sir.
No,
No,
sir.
sir.
Therefore, you cannot have a credit balance in cash book. A cash book should have a debit balance. Is it clear? Is it clear? Next comes two column cash books. Two column cash book. There are two columns here. First one obviously has to be cash book. The second one, it can either be discount column or bank column. Yes, obviously, if you have to choose between, then I will tell you choose discount. But otherwise, it can be both. It can be both. Both andre, it can be either discount or it can be bank. Is it clear? It can be either discount or it can be bank, but if you have to choose one, then choose discount. Is it clear, all of you? Yes. Now in this, what we learned is, in the discount column you have a debit discount and you have on the credit side. Yes or no? Both are different accounts, they are not the same account. Everybody with me, understanding? Yes. I hope it is simple topic. Pace is fine. Yes or no? Want me to go slower?
Yes.
ಅರ್ಥ ಆಗ್ತಾ ಇದೆಯಾ?
Yes,
This
sir.
part
Yes,
I
sir.
thought if I
Yes,
go
sir.
slower you will sleep
Yes,
ಅಂತ
sir.
ಅನ್ಕೊಂಡೆ. Yes or no? If I go slower in this part, I thought you'll sleep. Correct Ganavi ಅದಕ್ಕೆ. Huh? This is fine, I hope. Yes. So debit column is different account, credit column is different account. You cannot balance the discount column. You cannot balance the discount column. Debit discount is what? Which account? Discount received or discount allowed? Debit.
Allowed.
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 It is an expense. Debit is always expense. Discount allowed. Credit is income. Discount received. All of you clear? There are, so it is totaled and taken to the respective discount ledgers. It is totaled and taken to the respective discount ledgers. Is it clear, all of you? Next comes in your triple column cash book, where you have cash, bank, and discount column. When you have cash as well as bank, one special adjustment is your contra entry. That means an entry where cash and bank both are involved. An entry where cash and bank both are involved. Yes, clear, Vikram? Yes, cash and bank both. That means withdrawal of cash from the bank. Withdrawal of cash from the bank. For example, you're receiving cash. Cash you debit or credit? Cash you debit or credit?
Debit.
Debit the cash and you credit the bank account. Cases, right? You will have the entries both on the debit as well as credit side. Is it clear, all of you? Yes, in the ledger folio column, you'll mark it C. In the ledger folio column, you mark it C. Contra entries, always write both entries simultaneously. Don't keep the other entry for later on. As soon as you enter the debit, write on the credit side also immediately. Is it clear, all of you? Yes.
Yes, sir.
Yes. Next, that is your triple column cash book. Then you have one more special adjustment. That is your credit card sales and your debit card sales, where you have this bank charges, where you have bank charges. Clear, all of you? Please understand that credit card sales and debit card sales are also cash sales only. They're not on credit. Just because the word credit card is used, it doesn't mean it is sale on credit. It is credit sale itself. It is cash sale itself. Is it clear? So immediately the cash or bank account has to be debited, right? In case of a debit or credit card, obviously bank account has to be debited. Yes, but bank charges, depending on the adjustment given in the question, normally in CA foundation they given you that the bank charges will be debited at the end of the month. Clear? So at the end of the month you will pass the bank charges entry. Yes. Next, another special adjustment. Now concentrate on this part. Another special adjustment is check issued to be first treated as check received to be first treated as cash received. Yes, a check received is first treated as a cash receipt in most of the CA foundation cash book problems. Sir, how do I pass this entry? When a check is received, I told you, imagine it is a 500 rupee note. I told you, imagine it is a 500 rupee note. Clear, all of you? If it's a 500 rupee note you have received, then what is the entry you pass? Cash account you will debit, yes or no? Cash
Yes.
account you will debit, you will credit the debtor. Is it clear? You will credit the debtor, all of you. Yes. But however, it is not actual physical cash, it is check. It is check. So tomorrow when you deposit the check in the bank, you'll pass a contra entry because earlier you had passed it as a cash receipt. You will pass it as a contra entry. Is it clear? So cash will debit and credit knocked off. Ultimate entry always will be bank account debit to debtors. Bank account debit to debtors. Is this clear, all of you? Yes.
Yes.
Yes, sir.
Yes. So next, bills of exchange related one adjustment comes in cash book. Bills of exchange related adjustment. ನೆನಪಾಗ್ತಾ ಇದೆಯಾ? So whatever I'm telling today in the class, na, immediately after that, you just when you revise, it will be like you've revised the entire chapter. So all the important adjustments I'm covering up. Right? I may not be able to solve all the problems, right? Because I will focus more on inventory, depreciation, and partnership accounts. Illi we will go through the formats. I hope it is fine. I hope it is fine. If you want me to solve, I'll solve. But I thought more focus should be given on inventory, depreciation, and partnership accounts. Yes, because this you are well equipped. You are well equipped. Yes, to solve it on your own. However, one simple sample problems we will go through of the recent RTPs. Okay, we'll go through that, but I will not focus. I will not be solving all these adjustments. Yes, therefore, I'm covering through my explanation itself. Now, concentrate. One more adjustment with respect to cash book was your bills of exchange related adjustment. Bills of exchange. Yes, bills receivable, bills payable related exchange adjustment. Check which is received, all of you concentrate now. A check which is received and it is endorsed. If a check is received and endorsed, right? Normally it should not affect my cash book. Normally it should not affect my cash book, yes or no? Correct? A check is received and it is endorsed. From one debtor to the another creditor, it is endorsed. Clear, all of you? Therefore, debtor will be creditor and creditor will be debited. That's all. Both of them will get knocked off. That should be my ultimate entry. Ultimate. I'm not getting in bills receivable, bills payable, and all of that here. Ultimate entry will be what? Debtor has to be knocked off, creditor has to be knocked off. But however, if it is not endorsed on the same date as the date of receipt of check, right? Little deviation now. If I've received a check on the same date I deposit into bank, will you treat it as a cash receipt and then contra entry, or directly you show it as receipt in the bank? What will you do?
Receipt in the bank.
This adjustment was covered in the problems. This adjustment was covered in the problems. Nenpagta idea? All of you are able to recall this adjustment? Yes. However, what adjustment was not covered, and I'm now explaining. I received a check on the same day I endorsed it. Will it impact my cash book? Tell me yes or no.
No.
No, with same logic as bank account, same logic as check deposited to bank. When it is received and immediately endorsed, it will not hit my cash book. All of you understood? Or you can give a note on this. You can give a note on this. Arthakta idea. But however, you receive the check today. When you receive the check, what is the entry you pass? When you receive the check, what is the entry you pass?
Cash account debit.
Cash account debit to debtors.
Yes, sir.
Next day, what is the entry? Now I am endorsing it. I am endorsing it. Is it clear, all of you? To a creditor. To a creditor. Yes or no? So obviously, I need to reverse the cash which was debited earlier. I have to reverse the cash which was debited earlier. Agta agta idea. Yes.
Yes, sir.
Obviously, now debtor has already been knocked off. Debtor has already been knocked off. What is the entry for this? Okay, this alone, this adjustment alone, and make you write. Write down. Write down. Accounting process early. Important adjustment. Bills of exchange. Accounting process, important adjustment, bills of exchange. ಬೇಕಿದ್ರೆ okay, this is the first one. Point number one. ಬೇರೆದು ಬರೆಸ್ತೀನಿ ನಾನು. Others also make you write so that it is a cakewalk for you. When you're revising, no, quickly you can revise. Yes, number one. Bills of exchange related. Check received and endorsed the same day. Check received and endorsed the same day. Entry bariri. Creditors debit to debtors. Creditors debit to debtors. Creditors debit to debtors. You all agree with me? Ultimate entry. Please write there ultimate entry. Don't get, I'm not going to do bills of exchange chapter here. Ultimate entry. I hope everybody agrees. Creditors debit to debtors. Is it clear, all of you?
Yes, sir.
Therefore, no impact in cash book. Therefore, no impact in cash book. No impact in cash book. Next, check received today. Check received today. Next entry this is. Next entry. Number 1 ಆಯ್ತು. Next entry. Check received today. Endorsed tomorrow. Check received today. Endorsed tomorrow. Write down. Entry today. Entry today. Entry today. Entry today. Cash account debit to debtors. Cash account debit to debtors. Cash account debit to debtors. Albariri. Check received is first treated as cash receipt. Check received is first treated as cash receipt. Check received is first treated as cash receipt. Next. Endorsement entry. Endorsement entry. Creditors debit. Creditors debit to cash. Creditors debit to cash. Creditors debit to cash. ಅದ್ರ ಕೆಳಗಡೆ ultimate entry. Ultimate entry. Creditors debit to debtors. Ultimate entry. Creditors debit to debtors. Do you all agree? Cash account is getting knocked off. Ultimate entry is creditors debit to debtors. Is it clear, all of you? Yes. So this one adjustment will come in the examination. Yes. Next one, what they will give is the check which was endorsed is dishonored. Check which is endorsed is dishonored. Below that, write down. Second adjustment. Right, the second one. First one was bills of exchange. Idaita. Next, check endorsed is dishonored. A numbering note koli. Check endorsed is dishonored. Write down entry. Debtors account debit to creditors. You have to reinstate both balances. Debtors account debit to creditors. Debtors account debit to creditors. Below that, write down. Again, no impact to cash book. Again, no impact to cash book. Artha aita. Then after this, if they give, after this, they would have given again that another check was issued to the creditor and then debtor paid in cash. Debtor paid in cash because now you will not accept this check because it was dishonored. He gave it in cash and you paid the creditor in bank. Whatever adjustment they give, according to that, you pass the entry from here. Henceforth, it is normal entries. Is it clear, all of you? Yes. Is this clear?
Yes, sir.
Yes. Okay. So these are your important adjustments when it comes to cash book. When it comes to cash book, right? So you have a simple cash book, then you have your 2-column cash book, double column cash book, and then triple column cash book. Next, petty cash book. Sit straight, all of you. Petty cash book. All petty transactions, the small expenses are recorded in petty cash book such that the burden is not there on the main cash book and the main cashier. You have better control on petty expenses. At the same time, you have better control with the major expenses, major cash expenses, because of which you have a petty cash book separately recorded and a cash book main cashier. So there's a main cashier and a petty cashier. Impress system. Under impress system, petty cashier is given a fixed sum. Clear, all of you? Say 1,000 rupees. At the beginning of each period, the main cashier ensures that petty cashier has a balance of 1,000. At the beginning of each period, the main cashier ensures that the petty cashier has a balance of 1,000. All of you clear? He should
Yes,
have a
sir.
balance of 1,000. So that means if he has spent 600 rupees in first week, say if they're following a weekly petty cash system, okay, weekly period. In the first week, he has spent 600 rupees. That means at the beginning of the second period, how much will the main cashier give the petty cashier?
600.
600.
Yes, if
600.
he has spent 600, obviously he will give 600 such that the total is 1,000 rupees again. Such that the total is 1,000 rupees again. All of you understood this point. This is called impressed system. Impressed system. Then you have analytical petty cash book. Sit straight. Analytical petty cash book. In this, you have one column for receipts. You have only one column for receipts, but multiple column for payments. Where each petty expense is drawn up in a separate column. Each petty expense, it could be freight charges, transportation charges, yes, printing and stationery, etc. Any frequent occurring petty cash transactions, there is a separate column. It is totaled and taken to the respective ledgers. All of you clear? Yes. So you have one date column, receipt, and then you have amount, and here you have your petty cash transactions. Petty cash schedule, you have total and then the breakup in the different columns. Then the breakup in different columns. That is the format for analytical petty cash book. Yes, all of you, is this clear? So this covers my first chapter, discussion of first chapter, accounting process, subsidiary books, and in that cash book is also a subsidiary books. Cash book acts as both subsidiary and a principal book of account. It acts as both your journal and ledger. Is it clear? Cash book acts as both journal and ledger. That's it. Okay. Now quickly let us go through your revision material. Accounting process, page number 5. Yes. So accounting process, I told you it's nothing but RCS, right? Recording, classifying, and summarizing, where you record in the journal, classify in the ledger, summarize by preparing trial balance, and finally financial statements. Right? What are the accounting books? Journal, ledger, subsidiary books, and ledger. All subsidiary books are journal. Underline that. Yes, all subsidiary books are journal. Purchase book records credit purchase of goods. Credit purchase of goods. Sales book records credit sale of goods. Cash book records all cash receipts and payments, including towards cash sales and purchases. Contra entries appears in both cash and bank column. You have to mention C in ledger folio. C. I'll mention Madi C. C you have to mention in ledger folio. Types of books: single column, right? Double column, discount and cash, then triple column cash book, discount, cash and bank. Petty cash book, day-to-day expenses, simple petty cash book, and then you have your analytical petty cash book. Impressed cash system: at the beginning of every month, amount spent in previous month will be given to the petty cashier so that the cash balance at the beginning of the period remains same. Yes. Example is given, the same thing what I told. Balance in petty cash book is an asset, obviously. Rules of preparing trial balance. Balances of all assets accounts, expense accounts, losses, drawings, cash and bank balances are placed in the debit side. Balances of all liabilities, accounts, incomes, right? Income accounts, profit, capital are placed in the credit side. There can be any number of subsidiary books maintained by a business entity. Commonly used are purchase book, sales book, purchase returns, sales returns, bills payable, bills receivable, cash book, and journal proper. Classification of accounts and golden rules of accounting. Personal accounts: debit the receiver of benefit, credit the giver of benefit. Real account: debit what comes in, credit what goes out. And nominal account: debit all expenses and losses, credit all incomes and gains. This is the same thing we discussed just now. All of it I have already discussed. Yes, that's it. Come to the problem section. So these journal entries, I think I want to focus on the cash book. Come to cash book problem. Ram Agency's problem. Come here. RTP September 24. Prepare a triple column cash book from the following transactions of Mrs. Ram Agencies and bring down the balances for the start of next month. You've got cash in hand, cash at bank, paid into bank. Okay. Then brought furniture and issued check. Yes. Purchased goods for cash, received cash from Mohan, discount allowed to him 200. Now look at this transaction in the book. Come here. Others are all very simple. Huh? To balance brought down you have, right? And by bank account, that is later on. Okay. So this is the contra entry. Yes, deposit into bank 10,000 and then by bank account here credit cash 10,000 is the C and C. Yes. Now look at this. To Mohan, 200 discount is allowed, 9,800. That is the entry we just now saw. Clear all of you? Yes. Good. Cash sales, again normal entry. Cash sales, cash account is debit. So debit in the debit side, 2 sales. Paid to Lata by check, 14,500 and then discount received on the credit side. Yes, by Lata, discount receipt 500 and in the bank column you have 14,500. Okay. Next, received check from Gupta, allowed him discount 14,300. Look at this entry. To cash account because check received is first treated as cash receipt. Yes, 14,300. Next. Sorry, ಇದು 14,300 ಬೇರೆ, this is 14,300 is here. ಯಾಕಂದ್ರೆ 200 rupees is here. Okay. Yes, next. Withdrew cash from bank for office use. Acha, the same thing is here. On 26th, they said deposited Gupta's check into bank. Now, we don't care which check it is. We don't care which check it is. It's just a contra entry. Artha aita, all of you. It is just a contra entry for us. Here is the contra entry. Okay. And then all other transactions is simple. Paid rent by check. Same thing. This note you please give in the examination. ನಾನು ಕ್ಲಾಸಲ್ಲಿ ಹೇಳಿದೆ, please give a note on this, especially when the question does not mention, you please give a note that when check is not promptly deposited into bank, first it's treated in the entered in the cash column, subsequently at the time of deposit, bank account is debited and cash account is credited. That's it. All right. Yes, keep the videos on. Ashika, you there? Lakshana, Melit. Yes. Next chapter. Depreciation. Sit straight, all of you. So first, in depreciation, what is the first definition we learned? So because before understanding what is depreciation, you need to understand what you depreciate. We depreciate property, plant, and equipment. Sit straight, all of you. Yes, everybody. We depreciate what? Property, plant, and equipment. Property, plant, and equipment are tangible items. What are they? They are tangible items that are held for use in the production or supply of goods or services or both, that are held for use in the production or supply of goods or services or both, for rental to others or for administrative purposes. I'll give you a reason. What is this? Are held for use in the production or supply of goods or services or both. If it is for goods, say plant and machinery. For services, say a laptop. Clear all of you. For rental to others, right? If you're into the renting business, right, you could have held, or anything that is held for rental to others can come as a property, plant and equipment. Or if it is held for administrative purposes, say an office building, yes, clear all of you, that becomes property, plant and equipment. But very important, there is a cumulative condition, and are expected, not actually, are expected to be used during more than a period of 12 months. As long as the intention and the expectation is that the property, plant and equipment will be used for more than a period of 12 months, right? If it is a tangible item, if it is held for use in the production or supply of goods or services for both, or for rental to others, or for administrative purposes, and are expected to be held during more than a period of 12 months, you call it as property, plant and equipment. Yes, if it is a PPE, it can be depreciated. If it is a property, plant and equipment, it can be depreciated. What is depreciation? It is the systematic allocation of depreciable amount of an asset over its useful life. Systematic allocation of depreciable amount of an asset over its useful life. There are other definitions. Obviously, you see, if you have to write something about depreciation, this is an easy way to remember it. This is an easy way to remember it because I told you it is nothing but your SLM formula. Yes, SLM, straight line method formula. But if you have to explain in the examination, then obviously you need to write all the causes, etc. Clear all of you? Wear and tear, efflux of time. Yes, those are the causes of depreciation. Artha aita? Yes, next. So depreciation is the systematic allocation of depreciable amount of an asset over its useful life. What is depreciable amount? Depreciable amount of an asset is the cost of an asset or other amount substituted for cost less residual value. Therefore, SLM method, what is the numerator? Cost minus residual value. That is nothing but depreciable amount. The numerator of SLM method is nothing but depreciable amount. What is useful life? Yes, because depreciation is systematic allocation of depreciable amount. Depreciable amount is cost or other amount substituted for cost, right? Less its residual value. So systematic allocation of depreciable amount of an asset over its useful life. What is useful life? Useful life of an asset is the period over which an asset is expected to be available for use. Whether you actually use or not doesn't matter. As long as it is Danavi expected to be available for use, Kushal, then you call it as the useful life. Is it clear? The period over which an asset is expected to be available for use by an entity. Right? The other way of putting it, the number of units of production. The number of production units expected to be obtained from the asset is called the useful life. Is it clear? Right? This is my useful life. Then we learned what are the factors of depreciation? Cost, residual value, and depreciable. So, what are the factors? Three factors are there. I told you SLM method, same thing. Cost, residual value, useful life. In the same order, because cost and residual value. Cost is historical cost, residual value and useful life are both estimated. Residual value and useful life both are estimated. Clear all of you? Yes. When does depreciation of an asset begin? It begins when it is available for use. That is, if you remember our wordings, accounting standard wordings, when it is in the condition, location, and condition necessary for it to be capable of operating in the manner intended by management. When it is in the location where you want it, in the condition, right? It should have been installed, right? You should be able to use it. How? Use it in the manner intended by management, then you can start depreciation. Clear all of you? So when you record an asset is different. When the ownership transfer, you record the asset. When you start depreciating, could be different because depreciation depends on when it is available for use. Is it clear? Yes.
Yes, sir.
Yes. Cost of the asset. What does it include? It includes all the cost that is incurred up to the point in which the asset is actually available for use. Yes or no? So purchase cost is included. Any taxes which is not refundable, which I cannot claim credit, that is included as cost. Is it clear? Yes. Transportation cost, freight charges, yes, installation cost, all costs incurred until the point the asset is actually available for use, I capitalize. Post it is available for use, whatever costs are incurred is normally expensed off. Is it clear? Until and unless what is the exception here? It is a major repair which increases the useful life of the asset. Until and unless it's a major repair which increases the useful life of the asset, then I will capitalize. Clear? Then I will capitalize. Otherwise, all the cost is expensed off after it is available for use. So cost includes purchase price, taxes which is not refundable, any cost which is incurred to bring the asset to its present condition and location, it is capitalized. And I told you the third thing which you will always forget. Initial estimate. Very good. Initial estimate of dismantling or removing the asset and restoring the site on which the asset is located, that you will capitalize. Initial estimate of the cost of restoring the site and cost of removing the asset, that is also capitalized. Is it clear? So residual value or scrap value is never depreciated. Therefore you minus it from the numerator, and then that remainder we call it as depreciable amount. Then you have two types of depreciation, asset based and component based. One is for the entire asset when you charge a depreciation, which is my normal depreciation. Component based depreciation, where each component you have different set of components of a property, plant, and equipment. If you depreciate them separately, that I call component based depreciation. However, you should satisfy two cumulative conditions. First one, the cost of the component is significant compared to the entire cost of the PPE. The cost of the component is significant, that is significant cost compared to the overall cost of the item of PPE, and estimated useful life Yes. Estimated useful life or
The method of depreciation is
excellent. Or the method of depreciation is different from the rest of the parts of the PPE. Very good. Yes, when these two cumulative conditions are satisfied, that is, cost is significant, and the next, either useful life should be separate or the depreciation method should be separate. If these two conditions are satisfied, then you can go for component based depreciation. If you remember the example I had given you of an aircraft and a aircraft engine, you can go for component based depreciation. Yes, the different methods of depreciation, right? Before learning the different methods, one simple concept is to understand what is book value, what is written down WDV value and book value of an asset. When you purchase, that is my original cost. When you purchase, it is my original cost. Correct, Ruti? Then you depreciate it year on year. Then you depreciate it year on year. After depreciation, whatever the value is present in your book, that I call it as book value or written down value of the asset. Whatever value is there in the books, that I call it as book value or written down value of the asset, that is the depreciated value of the asset, I call it as book value or written down value. If the sale value of the asset, if the sale value of the asset is more than the book value, is it profit or loss? If the sale value of the asset is more than the book value, is it profit or loss? It is
Profit.
profit. If the sale value is less than the book value,
Loss.
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 then it is loss. Clear, all of you? Yes. When you sell the asset, you need to depreciate until the date of sale. When you sell the asset, you need to depreciate until the date of sale. Is it clear? You need to depreciate until the date of sale. Different methods of depreciation: straight line method, WDV method, the two important ones. The others we'll discuss later. Straight line method, also called, right? Also called fixed installment system, right? Also called installment method, because it is on the amount is same year on year. Yes or no? And then, or it is calculated on the original cost of the asset. It is calculated on the original cost of the asset. Is it clear? Why is it called straight line method? Because it is straight, it is fixed year on year. It is calculated on the original cost of the asset. Is it clear, all of you? Straight line method depreciation may not be same in two instances. First instance, when it is purchased in between the year. When it is purchased in between the year, say you purchase it, you are following calendar year, all of you concentrate, you are following calendar year, you purchase on 1st July, you purchase on 1st July, depreciation you will calculate for how many months?
6 months.
Depreciation you will calculate
6
for 6 months. In that case, first year depreciation will be half when compared to the next year. Next year onwards, it will be same again. Again, in the year of sale, say you sell the asset on 30th June, say you sell the asset on 30th June. In the last year, depreciation will charge from which date to which date?
1st Jan to 30th June.
1st Jan to 30th June, not 1st July. 1st Jan to 30th June, until the date of sale, you calculate depreciation again for 6 months. Is it clear? Yes. So these are the two instances where the depreciation will not be same. Otherwise, under SLM method, depreciation is same year on year. Depreciation is same year on year. Clear, all of you? Then you have called written down value method. Under written down value method or book value method, the depreciation is charged on the book value of the asset, on the written down value of the asset. If the cost of the asset is 1 lakh, depreciation rate is 10%. Depreciation rate is 10%. First year depreciation is 10,000 rupees. Is it clear? First year depreciation 10,000. 1 lakh into 10%, 10,000. Book value at the end of the year is 1 lakh minus 10,000, 90,000. 90,000. Depreciation in the second year, will be 10% of 90,000, 9,000. Book value at the end of the second year will be 81,000. Did you all understand? Whereas under straight line method, first year also 10,000, second year also 10,000. Is it clear? Is it clear? Yes. That's the
Yes, sir.
difference between straight line method of depreciation and WDV method of depreciation. Yes. Yes. Next, change in the method of depreciation is treated as what? A change in accounting estimate or change in accounting policy?
Estimate.
Change in accounting estimate, and therefore you give retrospective effect or prospective effect.
Prospect.
Retrospective or prospective?
Prospective.
Right? You forget the past. Only the future is considered. Is it clear, all of you? Say till now you followed SLM method of depreciation, right? 1 lakh is the purchase value depreciated for 5 years. Useful life is 10 years. I repeat, 1 lakh is the purchase value. Useful life is 10 years. Residual value is zero. 5 years have passed by. What is the depreciation charge till date?
20th.
I repeat, 1 lakh is a purchase value. Useful life is 10 years. Residual value is 0. 5 years have passed. 5 years have passed. What is the depreciation charge till date?
50,000.
50,000, 10,000, 10,000, 10,000, 10,000 for 5 years, 50,000. Therefore, book value now is 50,000. Therefore, book value now is 50,000. 1 lakh minus 50,000, 50,000. Now, if I tell you we are changing the method of depreciation to WDV, forget what has happened. Forget what has happened. Today's book value is 50,000. Charge 10% if the depreciation rate is 10%. So, first year depreciation, that is 6th year depreciation, will be 5,000 rupees. 50,000 to 10%, 5,000. Book value at the end of 5th year will be 45,000. Depreciation for the next 7th year will be 45,000 into 10%, 4,500, so on and so forth. Artha. So forget what has happened, only consider the future. Right? That is for change in method of depreciation. Same thing, change in the method of change in the estimate of useful life. Change in the method of estimate of useful life. Concentrate on all of you. Again, same example. Purchase cost 1 lakh. Purchase cost 1 lakh. Residual value 0. All of you with me? Residual value 0. Kushal. Residual value kitna? 0. Purchase cost 1 lakh. Useful life estimated at the beginning of the or at the time of purchase. Useful life estimated at the time of purchase 10 years. How much? 10 years. Clear all of you. 5 years have passed by. SLM method you have followed. What is the WDV of the book now? Of the asset now?
50,000.
Right? Book value of the asset is 50,000. Useful life is now re-estimated that the balance useful life is only 3 years. Balance useful life is only 3 years. ಅರ್ಥ ಆಗ್ತಾ ಇದೆಯಾ? Yes. So instead of 3 years, say 2 years. Simple Martin. So balance useful life is now only 2 years. Is this clear? It is re-estimated that the balance useful life is only 2 years. Is it clear? Right? Now forget what has happened to the past. Forget what has happened in the past. Today's book value is how much?
50,000.
The next 2 years? Under straight line method of depreciation, because I'm not changing the method of depreciation. Method of depreciation is same, that is straight line method. Is it clear all of you? Under straight line method of depreciation, 6th year depreciation is how much?
25,000.
25,000, because today's book value divided by the remaining useful life. Today's book value divided by the remaining useful life, 25,000 and 25,000. Is it clear? Yes. So this is my change in method, change in the method of depreciation, change in the useful estimate of useful life. Clear all of you? Yes. Then you have your other kanji pinji topics like production units method, machine R rate method, depletion method. Production units method, machine R rate method, and depletion method. Very simple. Production units method. What do? We don't take the useful life in terms of years. We don't take the useful life in terms of years. All of you with me? What they would have given is throughout the useful life of the asset, you expect that this plant and machinery will give you 1 lakh units. It gives you 1 lakh units. Clear all of you? In the first year, it gave you 10,000 units. 10,000 units. Understood? It gave you 10,000 units. Cost of the asset is 1 lakh. Cost of the asset is 1 lakh. What's the depreciation entry? Cost of the asset into number of units obtained in the current year. How many units?
10,000.
10,000 divided by how much units expected during the life? 1 lakh.
1 lakh.
1 lakh units. Therefore, 1 lakh cost into 10,000 units obtained in the current year divided by 1 lakh units expected during the entire useful life. Artha aita? Therefore, current year depreciation is 10,000 rupees. Current year depreciation 10,000. Next year, if it is 2,000 units, then into 2,000 by 1 lakh. Other Atmel, if it is 1,000 units, into 1,000 by 1 lakh. Cost will remain same. Is this clear? Again, if they've given you residual value, will you take cost or depreciable amount?
Depreciable amount.
Always take the depreciable amount everywhere. Always take the depreciable amount everywhere, other than only one place you will not take, that is WDV method. That is WDV method. Anybody remembers why? Anybody remembers why? I done this in the class. Only for WDV you will take the book value itself. Here you will not minus residual value. Why is that? Why is that? Anybody remembers?
Because
Yes, sir.
Yes, Kushal, bolo.
Because the residual value cannot be zero. It will just 10%, 10%. So it will never be zero.
No. It is because the rate of depreciation would have factored in the residual value. the rate of depreciation would have factored in the residual value. Go back to your class notes and check. I've given you a problem where for 10 years you've depreciated WDV as well as SLM method. At the 10th year or 5th year, whatever it is, this residual value will be there as it is. Technically, once the useful life is over, you should not depreciate, you should not continue depreciating. You should not continue depreciating because what is left over is actually the residual value. What is left over is actually the residual value. Clear, all of you? So for any method of depreciation, always consider the depreciable amount. Only for WDV, you will consider the book value because the rate would have factored the residual value. The rate of depreciation would have factored the residual value. Clear, all of you? Yes. Yes. So today, what you're supposed to do as soon as today's class is over, because I will not keep today's class long. Lengthy class idodilla now, right? 8:30, I will be stopping. Yes. As soon as today's class is over, I want you to revise all of these topics. I want you to revise all of these topics. Clear, all of you? Yes. Next. Yes, next topic was sum of years of digits method. Sum of years of digits method. Here, what do we do? All of you concentrate now. Formula is very simple. Cost into number of years remaining as at the beginning of the year. Very important. Number of years remaining as at the beginning of the year divided by total sum of all digits of the years. Total sum of all digits of the years. That is the formula. If you remember, cost into number of years remaining at the beginning of the year. Yes, say if it is a 5 years useful life. Say it is a 5 years useful life. Cost into, if we are in the second year. If we are in the second year, how many years are remaining?
4.
3.
4. Because
Four.
as at the beginning of the second year, 4 years are remaining. This is what it would be careful. Be careful. Ille mistake ಮಾಡ್ತೀರಾ. This is where you will go wrong and you're going wrong again. Be careful. Don't make that mistake. I repeat, you're in the second year. You're calculating depreciation for the second year. ಅರ್ಥ ಆಯ್ತಾ? Cost into number of years remaining as at the beginning of the year. In the second year, as at the beginning, how many years is pending? 4.
4.
4. ಅರ್ಥ ಆಯ್ತಾ? 4 divided by sum of all the digits. What is the formula for calculating sum of all the digits?
N into n plus 1 by 2.
N into n plus 1 by 2. So if it is 5 into 6 divided by 2. Clear? Yes. Use this formula to calculate the depreciation year on year. Use this formula to calculate depreciation year on year. Now, suppose you're supposed to start the depreciation account or prepare the depreciation account or the fixed asset account as the case may be after 4 years. So say for the fifth and the sixth year. Say you're preparing depreciation account or the fixed asset account for the fifth and the sixth year. All of you clear? You will start with an opening balance. Therefore, you need to compute what is the depreciation from the start till the opening balance. Yes, even in case of sum of years of digits. So if you remember, if that is there, then I told you a common factor you can take out. That means in the numerator, you can add all the balance life at the beginning of the each year. You can add it up 10 plus 9 plus 8 plus 7 and that till the date of the the account has to be prepared. Till the date the account has to be prepared, you add it up and then divide by sum of digits of all the years. Yes, we've done this problem. Please go through that problem, sum of years of digits method. Clear, all of you? So these are all the simple topics in depreciation chapter. Obviously, you have then similarly like production units, you have machine hour rate method and depletion method. Depletion you use when you are using natural resources like query, mining query, etc. You use depletion method, right? Just like production units method, you have to do depletion method and the machine hour rate method. Is it clear?
Yes,
This
sir.
covers the entire theory of depreciation chapter. Okay. Let us write down the 4 points. I want you to write down the 4 points that you should check always when you start a problem. Yes. What are the 4 points? Tell me. You guys should tell me.
Financial year, calendar year.
Financial year or
Point number 1. Check if it is financial year or calendar year.
Yes.
Point number 1. Check if it is financial year or calendar year.
Yes.
Next.
Method.
What else you check?
method of
Method of depreciation.
What is the method of depreciation? Here only you will check one more thing. What else?
Requirement.
Change of
Change of
whether
method.
there is any change in the method of depreciation. Whether there is any change in the method of depreciation. Here only one more point. If yes, then when is the change in the method of depreciation? First is it from SLM to WDV or WDV to SLM? Second is, when is it changing? That also you have to note down here only. Understood all of you? Yes. Next point. Next point.
Requirement.
What is the requirement of the question? What is the requirement of the question? Does it ask you to prepare machinery account? Does it ask you to prepare machinery and depreciation account? Yes. What is it asking? Is it asking you to prepare all necessary ledgers? Be careful there. What is the requirement of the question? Next
Is the opening balance clear?
is at the sub point. First main point, what is the period for which the account has to be prepared?
Period.
What is the period for which the account has to be prepared? If the period is from the date of purchase of the asset, if the period is from the date of purchase of the asset, that means no opening balance adjustment required. If the period is after the date of purchase of the asset, then opening balance adjustment required. Albaribeko. You should write. You should write this down. Right? If the period is from the date of purchase, then no opening balance adjustment required. If the period is from the date of purchase, then no opening balance adjustment required. If the period is after the date of purchase, then opening balance adjustment required. Opening balance adjustment, that you have to prepare a working note for the same. Is it clear?
So could you repeat, please?
If the period is from the date of purchase, if the period is from the date of purchase, no opening balance adjustment required. If the period is after the date of purchase, then obviously you have to compute what the opening balance is, right? Then opening balance working note or adjustment is required. Ashika, are you there? Ramani, Purvi, yes. Vinyas, Puneet, Bhargavi, any videos off ಆಯ್ತು sudden ಆಗಿ. Keep the videos on. Yes. Clear, all of you understood? Yes. So these are the 4 points that you will take care always. That you have to take care always. Next, another important adjustment. Write down important adjustment. Year 5. Year 5. Year 5. Opening balance. Opening balance. 1,20,000. Property, plant and equipment. The opening balance in year 5 is 1,20,000. Clear, all of you? Lahari. 1,20,000. Clear? Yes. That's the opening balance. One of the assets. So ನಾನು ಫಿಫ್ತ್ ಇಯರ್ ಹೇಳಿದೆಲ್ಲ ವರ್ಕಿಂಗ್ ನೋಟ್ಸ್ ತುಂಬಾ ಜಾಸ್ತಿ ಆಗಿಬಿಡುತ್ತೆ. ಜಸ್ಟ್ ಮೇಕ್ ಇಟ್ ಆಸ್ ಸೆಕೆಂಡ್ ಇಯರ್. ಪ್ಲೀಸ್ ಚೇಂಜ್ ಇಟ್ ಟು ಸೆಕೆಂಡ್ ಇಯರ್ ಸೊ ದಟ್ ಮೇಕ್ಸ್ ಅವರ್ ಲೈಫ್ ಇಸ್ ಸಿಂಪಲ್. Make it second year, all of you. Because concept is important, not calculation. Second year, okay? One correction. This is the second year. Clear, all of you? Second year, the opening balance 1,20,000. Yes. Next. One of the assets. Originally purchased for 50,000 is sold for rupees 30,000 on 30th June. On 30th June. It sold for rupees 30,000 on 30th June. Clear, all of you? WDV method of depreciation followed. WDV method of depreciation at 10% per annum. At 10% per annum. Books are closed on 31st December every year. Books are closed on 31st December every year. Clear, all of you? Yes. Let's write down. So working note number one. Working note number one. I'll first write down all the 4 points. Point number one. Yes. Calendar year. Correct. Calendar year. Point number two. WDV method. Point number two. WDV method. WDV at 10%. WDV at 10%. No change. No change. No change. ಅರ್ಥ ಆಗ್ತಾ ಇದೆಯಾ? ಪಾಯಿಂಟ್ ನಂಬರ್ 3. ಅಲ್ಲಿ ರಿಕ್ವೈರ್ಮೆಂಟ್ ಬರ್ದಿಲ್ಲ, ಪ್ಲೀಸ್ ರೈಟ್ ಡೌನ್. ಪ್ರಿಪೇರ್ ಅಲ್ಲಿ ಕ್ವಶನ್ ಅಲ್ಲಿ ಪ್ಲೀಸ್ ರೈಟ್ ಡೌನ್. ಪಿಪಿಇ ಪ್ರಿಪೇರ್ ಪಿಪಿಇ ಫಾರ್ ಸೆಕೆಂಡ್ ಇಯರ್. ಫಸ್ಟ್ ಇಯರ್ ಆಯ್ತಲ್ಲ, ದಿಸ್ ಸೆಕೆಂಡ್ ಇಯರ್. ಅರ್ಥ ಆಯ್ತಾ? ಪ್ರಿಪೇರ್ ಪಿಪಿಇ ಫಾರ್ ಸೆಕೆಂಡ್ ಇಯರ್. ನೆಕ್ಸ್ಟ್ ಕಮ್ ಡೌನ್. ಪಾಯಿಂಟ್ ನಂಬರ್ 3 ಇನ್ ವರ್ಕಿಂಗ್ ನೋಟ್. Point number 3. First working note only. In that we have sub points. Third point, requirement is PPE, right? Only one thing. Prepare PPE aste. PPE ledger, property plant and equipment ledger. Point number 4. Second year. Put hyphen and write. Opening balance given. Therefore, no opening balance working note required. Opening balance have given, right? Have I given or not?
You've given, sir.
Yes. Opening balance given, therefore no working note required. Don't blindly go by what I told earlier. Yes or no? Normally what I told earlier holds good, but in this problem, opening balance have given, therefore why you will prepare working note? Artha aita? If opening balance is not given, then opening balance adjustment is required. Is it clear? Yes. Opening balance adjustment not required. Next, working note number 2. Computation of profit or loss. Working note number 2, computation of profit or loss on sale of asset. Computation of profit or loss on sale of asset. Clear all of you? Yes. Next, write down purchase cost of asset. How much? 50,000. 50,000 less first year depreciation. At 10%. Correct? I have not given you date of purchase and all. So obviously you are assuming that is in the examination they'll give you the date of purchase, everything in detail. I just wanted to give you a crisp working note adjustment. That's why I'm not giving you date of purchase, assuming that it was obviously purchased on the starting of the period itself. So less depreciation at 10%, 5,000. Therefore, WDV at the beginning of next year. 45,000. 45,000. Is it clear, all of you? Next, any doubts anywhere? Please unmute or raise your hand and ask. Okay. Less depreciation from 1st Jan to 30th June. Next, less depreciation from 1st Jan to 30th June. 6 months. Agreed? All of us?
Yes.
All of you agree?
Yes, sir.
1st Jan to 30th June, that is 6 months. 45,000 into 10% divided by 2.
2250.
45,000 into 10% divided by 2. Yes, 2250. Next, book value on the date of sale. How much?
42,750.
42,750. Next, less sale value 30,000. Therefore loss, how much?
12,750.
12,750. Loss of 12,750. Artha aita? Next, working note number 3. Depreciation of second year. Write down. Opening balance of PPE. Opening balance of PPE. How much?
It is 1,20,000.
20,000. 1,20,000. Less. Opening balance or opening WDV. Opening WDV of the asset sold. Of the asset sold within bracket as at the beginning of the year, not as on the date of sale. As at the beginning of the year. Market important. This is where you go wrong. I repeat, less. Opening WDV of the asset sold as at the beginning of the year. Market important. How much is this?
45.
45,000. 45,000 from working note number 1. From working note number 1, 45,000. If you want, give a dotted arrow mark. 45,000, give a dotted arrow mark. 45,000, give a dotted arrow mark. Clear, all of you? Yes. So 1,20,000 minus 45,000, how much?
75.
75,000. 75,000. Therefore, depreciation for second year, 75,000 into 10%, 7,500. 75,000 into 10%, 7,500 ಏನಾದ್ರು ಅರ್ಥ ಆಯ್ತಾ? Yes.
Yes, sir.
Yes.
No, I'm so sorry.
Next. Below that, right? Huh?
So could you please repeat that?
ಎಲ್ಲಿಂದ?
That 75,000 into 7, like the percentage.
Depreciation. ಅದ್ರ ಮೇಲ್ಗಡೆ ಏನ್ ಬರ್ದಿದ್ಯಾ ಹೇಳಿ ನಂಗೆ. What have you written above?
75,000 and then the less depreciation for second year. Then after that,
75,000 into 10%. 75,000 into 10%, 7,500. 7,500. Depreciation for second year is 7,500. Clear, all of you? Next, below that, say a new asset was purchased. Say a new asset, fixed asset, that means a new fixed asset was purchased on 1st July. On 1st July, costing rupees 60,000. 60,000. Below that, write down depreciation of the new asset. Depreciation of the new asset, 60,000 into 10% into 1 by 6 by 12 into 6 by 12. 60,000 into 10% into 6 by 12. Did you all understand this adjustment? Yes. So that is 3,000. 3,000. 3,000. Below that. Therefore, total depreciation for second year. Total depreciation for second year. How much? 3,000 plus. ಮೇಲ್ಗಡೆ ಎಷ್ಟಿತ್ತು?
Sir, 67,500.
Don't take the asset sold.
Sorry,
Asset sold ಬೇಡ ನನಗೆ. Asset sold ಬೇಡ. Only the continuing assets depreciation.
7,500.
7,500 plus ಈಗ 3,000. Total 10,500. Total 10,500. Put a circle for this. This is what will come in my ledger. ಅರ್ಥ ಆಯ್ತಾ? Drop the PPE, property, plant and equipment, PPE. Draw the ledger. Debit, credit, particulars rupees, quick. Particulars rupees, rough lines. Okay, write down. Balance brought down, how much? 1,20,000. Debit side, balance brought down 1,20,000. Next. By bank account. On the credit side, by bank account, how much?
30,000.
30,000. Date of this is, I told you, ಏನು ಕೊಟ್ಟಿದ್ದೀನಿ?
Sir, 30th June.
30th June by bank account on the credit side, rupees 30,000. Next, on 30th June again, by depreciation, how much? Working on number 1,
2250.
2250. Are you able to recall this adjustment? This basically the entire first problem. This is what we did, right? What I probably did in 45 minutes. I'm just trying to cover it in 10 minutes here. That's all. Yes, done. 2250. Next. Again 30th June by P&L. By P&L. Loss, how much is it? 12,000?
7,700.
Is this to 7,000, huh?
750.
12,750.
12,750. 12,750. I thought this is my working note number 1 adjustment done. Working note number 1 adjustments done. Next, on the debit side, on 1st July, on 1st July, here I have not told, on 1st July, to bank account, what the purchase value of the new asset?
60,000.
60,000. 60,000. 60,000. On the credit side, on 31st December, on the credit side, on 31st December, by depreciation, working out number 2, the full amount, total amount, how much?
10,500.
10,500, is it? 10,500. Therefore, balance carried down. By balance carried down, tell me how much? Balance carried down, how much?
1,24,500.
24,500.
1,24,500. That completes my answer. Then obviously total the debit and credit. Clear all of you? Total the debit and credit. I hope this adjustment is very clear. This is what is 90% actually, if you ask me. 90% of the depreciation. Ide irodu. Right? Somewhere this is where what is covered in most of the places. Did you all understand? Yes. Then one day one problem, provision for depreciation, you should note down that problem you need to solve. Provision for depreciation. One day one problem irodu. Ad bandre, you will not be able to solve in the examination. If that comes in the examination, you will not be able to solve until and unless you have practiced that problem. Right? Early principle is very simple. Simple. I'll just cover the principle. All of you concentrate. Provision for depreciation. When you maintain, what is the intention, or what is the logic, or what is the necessity, or why are we? What is the purpose of maintaining a provision for depreciation account, such that the original cost of the fixed asset is seen in the balance sheet? Then you write less the accumulated depreciation, and finally you get what is the written down value. In this way you get both. Is it clear? You get both what is the original cost as well as the book value of the asset. Yes. So when you maintain a provision for depreciation, we do not credit the fixed asset account. We do not create the fixed asset account. Rather, the entry is P&L account debit to provision for depreciation, or you can route it to depreciation account debit to provision for depreciation, and then P&L account debit to depreciation. Is it clear, all of you? Yes. So this is what we do when we maintain provision for depreciation account. So machinery account will always be at original cost. That's all. It will be by bank account and to bank account, and then balance carried down. ಅರ್ಥ ಆಗ್ತಾ ಇದೆಯಾ? To bank account, balance carried down until the date of sale. ಅರ್ಥ ಆಗ್ತಾ ಇದೆಯಾ? Then when it is sold, you'll obviously have bank account. Now opening balance include is that original cost. Therefore, entire balance of the provision for depreciation pertaining to this machinery account, this asset, will be transferred to machinery account. ಅರ್ಥ ಆಗ್ತಾ ಇದೆಯಾ? Yes, will be transferred to machinery account, and then obviously you will have profit and loss account. The only difference is in the working note adjustment that I just gave you. By depreciation account is pertaining to that year of depreciation only. 2,250, whatever you have written, is pertaining to second year depreciation. Yes or no? If it was provision for depreciation, then you would take first year depreciation as well as second year depreciation. That is, first year I think is 5,000, second year is 2,250, 7,250 would have been your depreciation entry. Did you all understand? Yes. Did you all understand this adjustment? That so when you prepare this working note, you need to add the depreciation of all the years. That is what we did in the class also. Right? So this is the only different adjustment in provision for depreciation account. Clear? Rachana, sit straight. Next, when you prepare machinery disposal account, what do? We transfer the entire asset value which is sold to machinery disposal account, and there we recognize bank account and the respective depreciation and loss. That's all. We do not pass these three entries in. See, what is the entry? Working note number 1 only. Working note number in the main property, plant and equipment, the earlier problem, you pass 3 entries. What are the 3 entries? Bank account, profit and loss, depreciation. Yes or no? Yes. If machinery disposal is done, the addition of all these 3 accounts is transferred to machinery disposal account. The addition of all these three accounts is transferred to machinery disposal. In machinery disposal, you will recognize these three accounts. Artha aita? There is the difference when you maintain machinery disposal account and we don't maintain machinery disposal account. Is this clear? Is this clear? Right? So with this, we have actually covered the entire depreciation chapter. We'll just go through a couple of RTP problems. Okay.
Yes.
Come to theory first. It is a permanent, gradual, and continuous decrease in the value of depreciable assets. It's compulsory non-cash expenditure. Depreciation rate given is given in the schedule to the Companies Act. SLN depreciation is of, please underline, equal amount. Is of equal amount, right? WDV is reducing balance. Reducing balance. WDV is suggested since there is equitable charge to P&L over the life of the asset. Yes. Factors affecting, I told you factors is nothing but SLM formula. The factors which are, this is nothing but SLM method formula. Cost historical, this is historical. Yes, both these estimated scrap value and estimated life, these are estimates, right? Estimates. Causes or reasons of depreciation, wear and tear, efflux of time, obsolescence. Methods of accounting depreciation, I told you, SLM, WDV, depreciation fund or sinking fund, then sum of years of digits, machine hours, production units, annuity method, yes, and depletion method. Depreciation, formula cost minus estimated scrap value divided by estimated useful life. Any change in depreciation is a change in accounting estimate. Therefore, prospective effect is given. Component based depreciation, right? Illy, write down two cumulative factors. No, what are the cumulative conditions? Right? Number one, significant cost. Significant cost compared to the entire cost of the PP. Second, illy and either two arrow marks, useful life, or the depreciation method, or it is different. Amortization is for intangible assets or fictitious assets. We use amortization method. Okay. AS10, property, plant and equipment are tangible items that are held for use in the production or supply of goods or services for rental to others or for administrative purposes and are expected to be used during more than a period of 12 months. Right? Come to the problems. See, this is the same thing. Any examination RTP you take, ಇದೇ type problem ಬರುತ್ತೆ ಯಾವಾಗಲೂ. Okay. Even in the latest one, the same thing. Mrs. Alankrit Transport Company purchased 10 buses at rupees 50 lakh each. Therefore, this is the total cost. 10 buses into 50 lakh. Therefore, cost is 5 crores. On 1st October 2021. Okay. Very important. This is 1st October. Right? On 1st January 2024, one of the buses is involved in an accident and is completely destroyed, and 35 lakh is received from the insurance in full settlement. On the same date, another bus is purchased by the company for a sum of rupees 60 lakh. The company writes off 20% on the original cost per annum SLM basis. Give the bus account, requirement is bus account for the years ending 31st March 24, 31st March 25. What are the 4 points? First one, calendar year or financial year? Quickly.
Financial year.
It is financial year. Second one, what is the method? SLM method. No change. No change in the method. Number 3, what is the requirement? Bus account. Number 4, what is the period? 2 years. Which are the period? 2024 and 2025. Therefore, opening balance adjustment required, not required.
Required.
Required. Same problem. Can you all see this? What we did just now? Yes. So come here. Opening balance. They have done for one bus. It is for one bus. Arthakta idya. It is for one bus. Clear? So original cost they have given 1st October 21. Therefore, for 6 months you depreciate. Okay. Yeah, 20% is given. So 10%, 5 lakh. Then depreciation, very important. You would have missed this. ನೀವು ಫ್ಲೋ ಅಲ್ಲಿ 4 lakh 50 ಮಾಡ್ಬಿಡ್ತೀರಾ, or you will do 20% of this. No, it should be on the original cost. 50 lakh into 20%. Is it clear, all of you? Is that clear? Yes. Then you've got depreciation for 9 months, 7 lakh 50, 27 lakh 50,000, and then 35 lakh is sale. Therefore, there's a profit of 7 lakh 50,000. Yes. So opening balance 31st March 23, refer working note number 1 into 10, 3.5 crores. 3.5 crores. Next, if you see depreciation for 23-24, they have taken on 9 buses balance. Since it is SLM, you're not bothered about the adjustment that I told. Opening balance and all not required. Arthakta idea. Since it is SLM, opening balance not required, because if it is WDV, you need opening balance. On that you calculate depreciation because book value. SLM irodinda, there is no headache. 50 lakh into 9 into 20%. Did you all understand this? Did you all understand this? Then
Yes,
60
sir.
lakh into 1 into 20% into 3 by 12. Then depreciation for 24-25, 50 lakh into 9 buses, 20%, and 60 lakh into 1 into 20%. Simple, simple. Yes. So that is what you can see here, all the adjustment entries. Okay. Here there's a change in the method of depreciation. So since there is a change, they have followed this columnar approach. Columnar approach, what I had also done in the class. And all these are similar adjustments. That's why I'm just, if there's a different time of overhauling and erection, will you capitalize this? Will we capitalize, yes or no? Overhauling and erection, any amount that is incurred, right, until the date asset is available for use, for making it in the, for bringing the asset to its present location and condition without overhauling and erection, will it be in the condition? Will it be in the condition?
No, sir.
No, therefore you have to capitalize. You have to capitalize this, right? Others are simple, right? Then there's a change in the method of depreciation. That's all. The only difference is there's a change in the method of depreciation. So see, all are similar problem. ಕಾಣಿಸ್ತಾ ಇದೆ ನಿಮಗೆ? Transport company, 10 trucks, same problem, right? ನಾನು ಆಲ್ರೆಡಿ ಇದನ್ನ ಸಾಲ್ವ್ ಮಾಡಿದ್ದೆ ಕ್ಲಾಸಲ್ಲಿ ಈಗ ಇವತ್ತೇ. Old machinery 37,000, another machinery was purchased 10,000. On the same day, a new machinery was purchased and sold. Diminishing balance method, same thing, only the rate is changing ಅಷ್ಟೇ. Machine 1, 2, 3 you need to solve. Yes. So this is my depletion method. Depletion method. That's it. Okay. So all the important adjustments I have covered in the class. I have explained it. All right. So with that, we have completed depreciation chapter. Please go through the depreciation chapter. You have to solve. You have to solve a couple of problems. Don't just read it. Important problems you solve, and that will complete. Entire depreciation chapter will be covered. Clear, all of you? Those 4 points, if you cover, no, and keep in mind when you're solving, that's more than enough. Yes. Is this clear? Okay. Quickly. We'll just start with inventory and then we'll conclude for the next 5 minutes. Yes. What is inventory? Ready? What is inventory? Who remembers? Nobody? Inventories are assets, pakkana. Yes.
Yes.
Are inventories assets?
Yes,
So
sir.
start with that. No. Inventories are assets held for what? For sale in the ordinary course of business, in the process of production for such sale, or for consumption in the production of goods or services, or both, including maintenance supplies and consumables other than machinery space, standby equipments and servicing equipment. In Paita definition, right? They are assets held for sale in the ordinary course of business. What is held for sale in the ordinary course of business? What is held for sale in the ordinary course of business?
Inventory.
Which inventory am I talking about?
Close up.
Which inventory am I talking about?
Trading. Trading.
Stock in trade
Trading.
and finished goods. Stock in trade and finished goods is held for sale, right? Which is in the process of production.
Work in progress.
Work in progress, which is held for consumption.
Raw material.
Raw material, simple. Therefore, inventories are assets held for sale in the ordinary course of business, or in the process of production for such sale, or for consumption in the production of goods or services for sale. But it includes maintenance supplies, consumables. It excludes machinery spares, standby equipment, and servicing equipment. Is it clear? This is my inventory. Next, what is included in the cost of inventory? All of you tell me. What is included in the cost of inventory? Inventory cost includes again all the cost that is incurred to bring the asset to bring the inventory to its present condition and location. Purchase cost, taxes which is not refundable, right? Packaging cost, ಅರ್ಥ ಆಗ್ತಾ ಇದೆಯಾ? Transportation freight cost, any cost that is incurred to bring the inventory to its present condition and location is included as part of the inventory. Is it clear, all of you? Right?
Yes.
Next, in case of manufacturing processes, this is the raw material cost, because raw material will bring here. Is it clear? Then this raw material is converted to finished goods. So all the conversion cost, labor cost, overheads related to production, is added to the cost of inventory. Is it clear, all of you?
Yes,
Is
sir.
this clear? Right? Next, there are certain costs which is excluded. Trade discount. Do we account for trade discount? Do we
No, sir.
account for
No.
trade discount? No.
Do not.
Trade
No.
discount is never taken to the books of account. Is it clear?
Yes.
Yes, sir.
Next, cash discount. Cash discount. Is it added to the cost of inventory? Do you consider cash discount when you're calculating cost of inventory?
Yes,
Yes.
sir.
No.
Cash for cost of inventory, do you consider cash discount, or
No.
you show it as a separate expense?
It
Do you
is
show it as a
separate.
separate expense? It doesn't come in part of inventory. Clear, all of you? Cash discount we are not considering here. Understood? Understood? Yes.
Yes.
Therefore, what are the costs which is excluded? SAF, selling, administration cost, administration, if it is not related to production, related to production, it will come above. Administration cost not related to production. Finance cost not considered here. Understood? Abnormal cost not considered here. Storage cost not considered here. However, for storage there's an exception. If it is required as part of a production process itself, prior to the next production process, if it is required, then it is considered as part of cost. Otherwise, it is not considered part of cost. Remember, I told you some refrigeration cost required as a part of fermentation, etc. Then it is required as part of the production process. In such cases, the storage cost may be covered. Otherwise, it is generally storage cost is also excluded. Is it clear, all of you? Yes.
Yes.
So once you have arrived at cost, then we have to determine what is the valuation of inventory. Inventory is valued at what? Cost or NRV, whichever is less. Inventory is valued at cost or NRV, whichever is less. What is NRV? Net realizable value. Inventory is, what is NRV? Net realizable value. For different inventories, you have different NRVs. Finished goods, what is NRV? Estimated selling price minus estimated selling expenses. Estimated selling price minus estimated selling expenses is the NRV of finished goods. Is it clear?
Yes, sir.
NRV of WIP is nothing but estimated selling price minus estimated selling expenses minus estimated cost of conversion or cost of completion. Minus estimated cost of completion. One additional cost compared to finished goods, because work in progress is still not completed. Therefore, you minus the cost which is required to complete this WIP. Is it clear? Is it clear? That becomes the NRV of WIP. For raw materials, It is normally valued at cost. All of you with me? For raw materials, it is normally valued at cost. However, it is valued at NRV. Sit straight, concentrate, all of you. It is valued at NRV if two cumulative conditions are satisfied. What are the two cumulative conditions?
Cost.
Raw material is higher than
The NRV of the raw material, the NRV of the raw material is lesser than the cost. And NRV of the finished goods is also lesser than the cost of the finished goods. When both finished goods and raw material NRV is less than cost, then you recorded NRV. If any one of them, it is more, then you recorded the cost itself. Therefore, raw material normally at cost. At NRV, if two cumulative conditions satisfied. Is it clear? Is it clear? This is the valuation of inventory. Next, you have different methods. Different methods. What are the different methods? Yes. Inventory valuation methods, historical method, non-historical cost method. Historically, you have goods which are interchangeable, goods which are not interchangeable. Goods which are interchangeable, that means what? One can be exchanged with the other. You go to a mall like Mega Mart, you go. One t-shirt you take, another t-shirt you take, doesn't matter. Go to a vegetable vendor shop, you take one vegetable, other vegetable, doesn't matter. Artha. When goods are interchangeable, then you have four methods. First one is called FIFO method, first in, first out. Assumption here is whatever is purchased first is issued first. Whatever is purchased first is issued first. That is called FIFO. Next comes LIFO. Last in, first out. Whatever is purchased last is issued first. That is the assumption. Is it clear? Is it clear? FIFO, LIFO. Then comes simple average price method. You take the simple average of all the prices. Simple. You purchase at 10 rupees per kg. Next, 2 rupees per kg. Then 3 rupees per kg. 10 plus 2 plus 3 divided by 3. Simple. You're not considering the weights here. You're not considering the quantity of the units purchased under simple average price method. Under weighted average price method, you multiply the weights into the rate, total it up and divide by the total weights. You know how to calculate weighted average. That is called weighted average price method. Four methods under if the goods are interchangeable. If the goods are not interchangeable, then you follow specific identification method. Remember designer lehenga example. Yes or no? It's so costly. It is so important. You cannot exchange one with the other. Right? So you have to trace the cost of the particular product and find out what the cost is. That is called specific identification method. Is it clear? Is it clear? Yes, under non-historical cost method, you have two methods. One is called retail price method. Retail price method or adjusted selling price method. Here, goods are valued at the selling price. Closing stock is valued at selling price minus the gross profit. You get the cost of the inventory. You get the cost of the inventory. Last one is standard cost method. All of you sit straight. Standard cost method. Here, use this method where there are numerous transactions and there are lot of price fluctuations. Numerous transactions, price fluctuations like petrol, etc. Yes, you can use a predetermined cost rather than tracing the actual movement of the market value. Is it clear? This is called standard cost method. Standard cost method. So these are the different methods of valuation of inventory. Valuation of inventory. Is it clear, all of you? Yes. So tomorrow, yes, I will not be repeating this. So please revise whatever I've discussed so far and come. Okay. In theory also, tomorrow we will discuss. Tomorrow we will discuss the calculation mechanism. Right? That is what? How do you calculate the physical inventory? Arthakta idea, all of you. Physical inventory. What is forward method? What is backward method? We will revise that concept. Right? And then the what is that? Sale on approval adjustment and consignment adjustment. This is what we'll discuss in the next class. And then from there, we'll start going through the problems. Okay. So inventory will do, and after inventory, we'll start with partnership account. So whenever my next session is, I don't know when my next session is. So whenever my next session is, I'll take it up. Okay. So you guys, please revise today itself. Complete entire accounting process. Finish depreciation. After that, you still have time. Please start with inventory. Please start with inventory also. Clear? I don't want to extend because I've been told that you have had a tiring day. Otherwise, I don't mind extending for another 15-20 minutes and completing inventory chapter. I've been told that you are very tired today. You had some exam, you had to prepare. After that, you had valuation. I don't know. Had a valuation session also? Yes. So
Yes.
what time was the exam?
2 to 4.
2 to 4, sir.
2 to 4 was exam, and then you had valuation. Okay, and now you had this another 1.5. So I know you're tired. So I will not extend it anymore. Okay. Don't go rise. Okay. But You don't stop. Please prepare everything. Okay. Finish accounting process. Very simple thing. Introduction of accounts also you can go through. Finish accounting process. Depreciation compulsory you have to finish. Inventory also I would suggest you to finish off the theory. And problems also you can start nothing like it before tomorrow's revision session. What time is tomorrow's revision session for you? 5 o'clock. Yes. So
5 p.m. onwards.
5 p.m. onwards. Yes. So until then you have enough time. You can finish off these things. Clear? कुशल
Clear.
ठीक है. सो मत जाना अभी पढ़ना. थोड़ा
Yes,
ब्रेक लो
sir.
फिर पढ़ो. Okay. Thank you everybody. Bye all of you. Have a great day. Bye.
Thank you, sir.
Thank you, sir.